Morning. This is a continuation of accumulation and distribution lecture because I want you guys to be profitable. Mind you, some of us is just in our DNA to lecture, to give out the knowledge we have. Because at the end of the day, after all we have passed through, the pains of learning forex on our own, the blowing of accounts, it's not a wonderful experience which deep inside my heart I will not want another one to pass through it. So that's the main reason some of us YouTubers, some of us creating this content feel a burden in our heart to come and give it to you. Why am I saying this? So that you don't feel that we are creating content. No, this is the only channel we feel we can give out our knowledge to help those that are interested. Considering our country today, a lot of people are trying to see how they can make a living through forex trading. So those of us that knows this little secret, you feel a burden in our heart to give it out. So not for the sake of content creation, because what I'm giving out to you, if you ask some of my students, they'll be wondering, why is boss giving out this lecture for free? But it's a tips, okay? Which I believe you are already working on your strategy. So if you begin to put this puzzle into your strategy, in no time you're going to be profitable. All right. Now, this video is all has to do. What I'm going to teach you now is how you're going to use some indicators to align your strategy to tap into the distribution phase. Right? Now, in the previous video, I was able to show you how to identify the accumulation phase and to stay out of it, and you can tap into, and why you should tap into the distribution phase. In this video, I am going to show you how you can use certain indicators to be able to align your strategy towards the distribution phase. Now, as you can see in this chart, this is a channel, an accumulation phase. We only expanded it in the 4-hour. In a daily chart, you can see how it is. Not really making a significant move. Taking money from the retail traders and broke down. When you see this breakout, the market is not giving back this money. Market has to distribute money down to those that knows what they are doing. Right? This is how they make money. So when you see a breakout, the market is not going back to this level. So you need to find, this is where certain indicators are useful. There is a reason why a lot of people say that indicators doesn't work. They delay. They're not using it right. Even though you're using it, you're using it in the wrong time frame. These are key things you need to know, which I'm going to show you in this video. The stochastic oscillator is a very good indicator if you are using it in the right time frame as a day trader. If I tell you the right time frame to use stochastic oscillator as a day trader, only that tips alone, I should be expecting an appreciation, but I'm going to give you for free. Stochastic oscillator can mislead you if you are using it in the wrong time frame. But if you are using it at the right time frame and you know what you are looking for, is a very good indicator. Now, as in this chart, you are in a daily time frame now, and the market is trending down. So you activate the stochastic oscillator, the default settings, and you put it in your 4-hour chart. As a day trader, you use your 4-hour chart because every 4-hour candle is a session. So you put it on, you cannot go into your 4-hour chart. Now you know that the market is trending down. So whenever the market comes into an overbought area, mind you, in a sell trade, when the market comes into an overbought area, you can see it here, in an overbought area, and cross is a sell signal. You take it down to the 20 oversold area. Market goes back, you wait, it's coming. The market goes back into an overbought area and give you a cross. You sell to an oversold area. This happens all the time. Vice versa in a buy trade. If the market breaks above, you are going to wait for the market to come to pull back into what they call an oversold area. Then you buy again. That's how you tap into the direction of the distribution of the market makers. There are so many other indicators that can help you in tapping into the distribution of the market makers. But I will leave that for my students. If you want to be my student, you can contact me and I will show you how, and I will give you details and the best indicators to use to know the exact reversal point. But what I've given to you today, the stochastic oscillator is one of the key indicators we use to identify the key reversal and continuation points. So you can begin to put this in practice and study it, take it serious, and you increase your win rate. But the key important thing in this lecture is so that you know that you begin to know what you are looking for. You don't just jump into a trade without knowing what you are looking for. You don't just take a signal from a signal guru without equally analyzing it properly. If you take a signal from a signal guru to sell or buy a trade, you go to your daily chart. Where is the current accumulation point? Where is the distribution? If the distribution is in line with the signal, you now use a stochastic to know if the market has aligned with the stochastic level. You now know if that signal is true. You can see that Forex is simple. In this little video, I have been able to simply show you how to analyze a chart as a daily trader. So, only with your daily chart, you can know what the market is saying for that day. So, when you are looking for, in a weekly chart, in a monthly chart, it's just to build up confidence. All right? But what makes you a day trader, a retail trader, is knowing knowing the accumulation and distribution point of the day. Okay? So now, this is stochastic I have shown you. We also have other indicators you can use. Let me give you another indicator which has proven to be very effective. I think I should remove this. I have to remove this. Another indicator that has proven to be very effective is the Fibonacci indicator. Okay? So the Fibonacci indicator is a very key indicator, which is Fibonacci indicator. First, I want to let you know one thing. A lot of robots you see using martingale strategy, they use Fibonacci indicator. This indicator is very, very powerful. I have been trading for over 15 years, and I have practiced all these things. I have investigated so many robots, and I realized that all what they do is Fibonacci indicator. So this calculation this indicator uses is so accurate. Whoever invented it is a genius. You pull it down to wherever the market is reversing. You pull it down to wherever the market is reversing. Let's say the market is reversing here. The market begins to pull back from this level. Let's say this is a key reversal point. Because it's a downtrend already. Momentum is down. If the market doesn't reverse here, it's going to reverse here. Market doesn't reverse here, it's going to reverse here. It doesn't reverse here, it's going to reverse here. Okay, let's take it back to where it reversed at the first place. Before it broke down, market begins to reverse. It got to level 23.6, it pulled down. It got to level 38.2, it pulled down, broke down. So this is going to, professional traders only look at this, knows already that the market is down. Then they begin to use this key level based on this indicator to re-enter their trade. So if the market begins to pull back at this point, at 23.6, you wait for a price action, you sell. At 38.2, you wait for a price action and sell. At 50.0, you wait for price action and sell. At 61.8, price action and sell in the direction of the distribution. Mind you, we at ASI FX Capital, we have a 99.9 way of identifying a key continuation point. So if you want to get that knowledge, you need to contact us through our Telegram channel for mentorship. Alright? Through our Telegram channel, you message us that you want to be mentored by us, then we follow up from there. We are going to show you a key reversal point, a key continuation point that win 99.9%. But these are the several indicators we use in combination to have a good entry point. Another indicator we use in combination to have a key entry point is the moving average. It's a very strong indicator used by even the best robots in the world. To have a good entry point. This moving average is the key indicator. To confirm the direction of the trade. This is a 50 moving average. You can see it confirms a downtrend. It confirms a downtrend. A downtrend. A 50 moving average confirms a downtrend. It's as simple as ABC. Now, one thing I want to let you know in copying someone's strategy on YouTube is that you are just trying. You should already have what you are working on. Then you cannot pick the pieces and begin to perfect your strategy. But if you don't have what you are working on, then you want to copy the strategy exactly from the YouTube or from your content you are watching on the YouTube, you won't get it right. So it's better you contact the owner of the strategy to get the full knowledge. What I am sharing here with you, if you already have a working strategy, you can actually impute with your wisdom and knowledge. You can take from here and perfect your strategy to increase your win rate. Okay? But if you don't have at all, you are a newcomer, I will really encourage you to come in. Let's mentor you to become a profitable trader in a day. By giving you the key things to look out for, you are going to be profitable in no time. So these are the few indicators. In combination, we use them to have a perfect entry point. All right. So no indicator is useless. You are not just using it right. It's either you are using it at the wrong time frame or you are using it in the wrong strategy. You don't really know what you're doing. Because if you know what you're doing, indicator is a great asset. Without this indicator, so many profitable traders will not be profitable. If they delete some of these indicators from this chart, a lot of profitable traders will go home. Because what we have spent over 15 years to build, to perfect, to practice, we cannot give it for free. The best you can do is what you are doing to assist you, those that are struggling like where we were before, to begin to pick the pieces, to perfect what they are doing already, to become professional traders tomorrow. Alright, so these are the key indicators we used in combination to have a perfect entry. Thanks for watching. Bye for now.